the nature of markets. So one of the reasons why we can make a lot of money in equity markets is because they're auction driven. And auction driven markets are very different from almost any other kind of market. So to give you an illustration, let's say I bought a flat in Mumbai for 1 crore. I don't know if we can get one for 1 crore or not, but let's play along. We got one maybe in the periphery of Mumbai. Okay, so we paid 1 crore for the flat, and we did research and we found that it's the right price and we bought it. And now we want to know how the price of that flat changes every day. So I have a friend who's a real estate broker, and I tell my friend, the real estate broker, listen, we're going to have chai with Pabrai every day. You and I are going to have a cup of tea. And every day just come and tell me what the market price of my flat is. Let's say my flat is a listed company on the Bombay Stock Exchange, where the only asset is this flat. And every day the price is doing whatever it's doing in the market. And we chart that daily price movement. What we're going to find is in a 52-week period, the range may be something like between 70 lakhs and 1.3 crores. And the reason is that auction-driven markets undershoot and overshoot. And it is the undershooting and overshooting that creates the opportunity for people like me, right? And so basically, the idea of a stop loss would be like I bought the flat for 1 crore, and so after 6 months, my broker tells me, prices have dropped about 5%. And I say to him, okay, that's my stop loss, and I'm now going to sell you my flat for 95 lakhs. Please sell it, right? It would be the equivalent of doing that. The reason you bought the flat for 1 crore because you thought that was fairly priced, and the second reason you bought it because you wanted to hold it as a long-term asset. So the same thing with stocks. If you bought a stock for 200 rupees, or it has a market cap of 1,000 crores, you bought it because you thought it's worth 2,000 crores. So if it goes from 1,000 crores to 900 crores, you will sell it with stop losses, and it makes no sense. So I own a company called Rain Industries, right? And I bought that stock about 2.5 years ago. And when I was buying the stock, it was at about 30 rupees a share. And by the time I finished buying, it got up to 45 rupees a share. It went up almost 50% because I almost bought 10% of the business. And after I finished buying, it proceeded to go down, just like everything I buy. Okay, the stock knows I bought it, and it decides, Mohnish is done, now let's go down. Okay, if I had engaged in stop losses, Rain went down to 40, even went down to 35 after I finished buying, and I did nothing. And so now Rain is north of, 360 rupees. And so that whole opportunity would have been gone.